Hey there, future Wall Street wizards. Ready to dive into the world of finance? Ever borrow a few bucks from your parents? Maybe for a slice of pizza or that must-have video game? Remember the excitement of getting that money in your hands? That, my friends, is a loan in its simplest form. You promise to pay back the money, and your parents trust you'll keep your word. This trust is the foundation of all financial transactions, big or small. Now imagine a company needing money, a lot more than a few bucks. They could be developing a game-changing product or expanding into a new market. Just like you might turn to your parents, companies can borrow money from investors. This is where things get interesting. One way they do this is by issuing something called debentures. Think of them as IOUs for grown-up businesses. These debentures are formal agreements to repay the borrowed money with interest. Instead of borrowing from mom and dad, companies borrow from folks like you and me, the investors. Now you might be thinking, why would I lend money to a big company? Great question. The answer lies in the potential for profit. When companies succeed, they pay back the loan with interest. And that's where you can make money. That's where the exciting part comes in, the potential for profit. Stay tuned for more insights into the world of finance. So, what exactly are these debentures we're talking about? Let's dive in and break it down. In a nutshell, they're unsecured loans. This means there's no physical asset backing them up. That means the company isn't putting up any collateral like a house or a fancy car to back up the loan. It's all about trust and reputation. It's a pure trust game. Investors believe in the company's ability to repay. Companies issue debentures to raise capital, the lifeblood of any business looking to grow. This capital can be used for expansion, new projects, or even to pay off other debts. They promise to pay back the borrowed money with interest over a set period, just like you promised to pay back your pizza fund. It's a formal agreement. But here's the kicker. Debentures typically offer a fixed interest rate. This is a major attraction for investors. That means you know exactly how much you'll earn over the investment period. No guesswork involved, no surprises, no stock market roller coasters, just steady, predictable returns. Sounds pretty sweet, right? It's like having a financial safety net. Now you might be wondering if there's no collateral. What's stopping companies from running off with my money? Another excellent question. It's all about legal frameworks and trust. Don't worry, we'll cover that in the next section. Stay tuned to learn more about the safeguards in place. Remember those credit scores everyone's always talking about? They're not just for individuals. Well, companies have them too. Just like personal credit scores, these scores reflect a company's financial health. Before you even think about lending your hard-earned cash, it's crucial to check out the company's creditworthiness. This helps you make informed decisions. Think of it like this. You wouldn't lend money to a friend with a history of forgetting to pay back, right? The same principle applies here. The same goes for companies. A company with a poor credit score might struggle to repay its debts. Look for companies with a solid track record, strong financials, and a bright future. These are indicators of a reliable investment. Now, when a company issues a debenture, it's essentially making a promise to its investors. This promise is a commitment to repay the borrowed funds. That promise is backed by the company's reputation and its ability to generate profits. A strong reputation can be a good sign of reliability. Investors, in turn, are betting on the company's success. They analyze market trends and company performance to make their decisions. If the company does well, everyone wins. The company grows, and investors see returns on their investments. The company grows, investors get their money back with interest, and the economy keeps humming along. This cycle of growth benefits everyone, but as with any investment, there are risks involved. It's important to weigh the pros and cons carefully before making a decision. Okay, we've talked about investors, but what's in it for the companies? Why choose debentures over other ways of raising capital? First off, debentures offer flexibility. Companies can structure the loan terms, such as the interest rate and repayment period, to suit their needs and financial situation. It's like tailoring a suit, a perfect fit for their business goals. Secondly, issuing debentures doesn't dilute ownership. Unlike selling shares of stock, companies retain complete control over their operations. It's like keeping the keys to the kingdom while still getting the funds to expand it. Finally, the interest paid on debentures is often tax-deductible, putting more money back in the company's pocket. It's like getting a little bonus from the government for borrowing responsibly. Section 5 Investor Advantages, Why Debentures Attract Savvy Savers. Now for the million-dollar question, why should consider investing in debentures? Remember those fixed interest rates we talked about? In a world of market volatility, they're like a safe haven for your money. You know exactly what you're getting, rain or shine. Moreover, debentures often offer higher interest rates compared to traditional savings accounts or fixed deposits. It's like giving your money a chance to grow faster while still enjoying relative safety. And let's not forget the power of diversification. Adding debentures to your investment portfolio can help spread your risk and potentially enhance your overall returns. It's like having a well-balanced breakfast, a little bit of everything for a healthy financial diet. Section 6. Where to find debentures, your guide to the market. So, you're ready to jump into the world of debentures? Fantastic. But where do you find these investment gems? Well, you're in luck. Debentures are issued by a wide range of institutions, from corporations to financial institutions to the government itself. Yes, even Uncle Sam needs to borrow money sometimes. You can purchase debentures through brokerage accounts, banks, and even online platforms. It's like shopping for anything else these days, convenience at your fingertips. Before you dive in, remember to do your homework. Research different issuers, compare interest rates and terms, and consult with a financial advisor if needed. Knowledge is power, especially when it comes to investing. Section 7. Spread the word debentures, a conversation starter. Congratulations, you're now well-versed in the world of debentures. But don't keep this newfound knowledge to yourself. Share it with your friends, family, and even your grumpy neighbor. You never know who might be looking for a new investment opportunity or just wants to sound smart at their next cocktail party. Explain how debentures work, discuss the potential benefits and risks, and encourage them to do their own research. Who knows, you might just become the go-to financial guru in your social circle. Section 8. Join the discussion. Your thoughts on debentures. So, what do you think? Are debentures the right investment for you? Share your thoughts, questions, and experiences in the comments below. Let's get a conversation going and learn from each other. After all, the more we know about different investment options, the better equipped we are to make informed decisions and grow our wealth. Remember, knowledge is power, and sharing that knowledge is even more powerful. Now go forth and invest wisely, my friends.